Here, I'm Badi Sudhakaran. I'm co-founder of VALR, which is a crypto exchange based out of South Africa. We are the largest exchange in terms of trading volume in Africa. We were founded VALR in 2018, so we've been at it for about 7.5 years. In terms of like our journey, we started off small. We have backers like Pantera Capital and Coinbase Ventures, and we have about 1.5 million customers. We have products like spot trading, futures like any other exchange does. And we're currently focused on building institutional grade infrastructure, as well as looking at expanding into more regulated markets. One of the things that the industry should pay attention to is the progress that's happening in the global south, not because customers are looking for speculation or ways to get rich quick, but actually utility-based crypto adoption that's happening in the global south. And also one other thing that I personally believe is that there is going to be a wave of institutional interest in providing crypto services to the traditional financial instruments, people who are interested in accessing those financial instruments. So that is happening. So those are the things I think we, as an industry, we need to pay more attention to.
Strategy.
Mm-hmm. Well, I think the key is to act like you're regulated everywhere, right? So just as a historical tidbit, when we first started VALR in 2018, we did approach the regulator in South Africa as to whether we can get some form of authorization or license for us to start. But at that time, 7 years ago, I think the regulators were still understanding this new asset class, trying to figure out how to regulate. So they said, we don't have a framework, we don't have a thing to give you to say, okay, you can go ahead and start the business. So when we started, we were self-regulated. So like I said, you have to act like you're regulated everywhere. And when you think about regulation, one of the three key foundational things that the regulators look at is how do you really know your customer and you can verify who they say they are? And then how do you custody your customer's assets as well as reporting, so like suspicious transactions and things like that. So with these three foundational pieces, you can, if you design your systems to be modular enough, then you can adapt locally as well as scale globally. Because as I mentioned earlier, we are looking at other regulated markets and other licensing frameworks where we can get licensed. We have an authorization in Poland, and we are pursuing a digital assets license in Cayman Islands and Malta. So when you look at all of these, and there's MiCA license, and then even in South Africa, there's a framework called the CASP license, which is a crypto asset service provider license, so on and so forth. And we have many licenses locally in South Africa. So the ultimate goal is obviously when you speak to the regulators, you not only are talking about the risks involved with we did talk about a lot of risks involved with this asset class, but the opportunities and possibilities of crypto as a technology for humanity to move forward in the world of finance. So long as we're working that way, I think scaling globally and adapting locally should be fairly straightforward.
Great. Sardar?
Actually, on my end, we are frequently working with the regulators.
Is there anything exciting?
Well, yes. I think when I mentioned about building institutional infrastructure, we're seeing a lot of interest in local institutions very interested in distributing crypto products to their own customers. So we pride ourselves in building this infrastructure, and we call it Build with VALR. So any institution that wants to provide crypto services to their customers, they don't have to think about wallet infrastructures and cold wallets and hot wallets and trading and matching engines and leverage and so on and so forth, savings and staking. We've built it all, right? So, and then using the APIs that we have built, many of these institutions are already integrating and talking to us, including big banks in South Africa. So that's very exciting for us. And that is where you see real adoption, where in some way you're using crypto without knowing you're using crypto, and that is where the magic happens of adoption, and it becomes a habit of using, just like when we use internet, we don't really think about, yes, now we are turning on the internet, right? So I think that is very exciting for us, and especially for our mission, where we want to make financial instruments more accessible to customers, not just locally in Africa, but globally everywhere. A knee-jerk reaction could be regulation, but actually, I think infrastructure is at the core of the challenges we face in emerging markets. So like in Africa, or for example, is a very similar market to other emerging markets. There's a lot of smartphone penetration, but that does not mean that you have reliable internet or affordable data and things like that. So there is definitely that infrastructure piece. But in addition to the infrastructure in that regard, but also there's infrastructure from a crypto point of view, like payments point of view. And do you have access to a more modern financial system than what you're used to? Because are you paying through your nose just to look at your transaction history and things like that? So infrastructure is definitely the challenge, and we have built this kind of infrastructure over the last 7 years, where people have come to, like, we started off very simple with a Bitcoin to Rand in the local currency trading, and then from now we have, as I mentioned, spot derivatives and payments and savings product, yield and staking, and inward remittances, and so on and so forth. So we have focused on building that infrastructure. But once you have that infrastructure, then you can drive user behavior, user education, and then I think regulators take notice. Because if you don't have the infrastructure, you don't have the user behavior, there's nothing to regulate, right? But we also have worked over the last 7 years with the regulators, as I mentioned, not just highlighting the risks of crypto adoption, but also the possibilities that there are to modernize financial systems. And we have worked closely with the local regulator in South Africa to build that framework for regulating crypto asset service providers. So I would say focus on infrastructure, and then focus on user behavior, user education, and then regulators will come, and then we can work together so that we are serving the customers in the best way possible in building a new financial system.
Yeah, thank you. So this
after something that can preserve what they already have, right? So that mirrors a lot of the behavior that we see also in Africa, many of the African countries where there's currency debasement. That's a common theme that you're basically trying to use it as a utility that's actually necessary than speculation. So Turkey is teaching us that the next 100 million users are not coming because of speculation, but out of necessity. Institutions wanting to use the crypto infrastructure the exchanges have built so that it's more ubiquitously available to customers across the globe.